Hi, my name is Jessica Jong. I'm a mortgage specialist from FIS Management. I assist home loan borrowers to pay off their mortgage fast. Today, I would like to share with you on this topic, managing loans post-moratorium in 2022. Now, let me share my slides. Okay. First, I would like to share with you on how this 6 months moratorium works. Now, Bank Negara has introduced a financial reliefs in the form of auto moratorium on all bank loans, except for credit card balances for those affected by the COVID-19 outbreaks. The eligible individual SMEs customers will be granted an auto moratorium for a period of 6 months, starting from April 1st up to 30th of September 2020. Now, when the first version of moratorium ended in 2020, the Malaysian government came up with another versions of moratorium in July 2021 in order to continue assisting those in need. Now, during this period, loan borrowers do not need to make any repayments. However, during this 6 months moratorium, the interest and profit will be accrued. And once the repayment is resumed, the accrued interest will be capitalized, and this amount will be added to the principal balance and treated as total outstanding balance. And thus, it will be compound over time, and payment will be used to knock off the accrued interest or profit first. Here, I would like to show you on how bank charge on the loan interest. Now, I'm taking a scenario that outstanding balance as at 31st of March 2020, 500,000, okay, and effective interest rate at 4%. Now, take a look at the example on the left. In April 2020, what is the interest charge? Okay. Now, we take this ending balance of 500,000 multiplied by 4%, multiplied by 30, divided by 366 due to leap year, and interest charge was 1,639 ringgit and 34 cents. Okay, so if you can see from April to September, the ending balance will always be 500,000, and this is because bank did not charge on the compounding interest. But there are banks that are charging compounding interest. So if you see the example here on the right, in May 2020, the ending balance is the ending balance was 501,639 ringgit and 34 cents after the interest earned is capitalized and charged to the outstanding balance. Okay, so if we were to compare from April up to September for these banks that are charging on compounding interest and versus bank that are not charging on a compounding interest, the difference on the interest earned would be 83 ringgit and 70 cents. Although this amount is not significant, but we have to be mindful that this amount will compound. Okay, it will compound over the tenure of the loan. So generally, this is how the formula on how bank charge on the interest. And here I want to emphasize that all banks in Malaysia, they have their own sets of calculations, and their terms and conditions are also different. Now, let me show you on how on what would be your risk if you take on moratorium. Okay, so in this example, I'm taking a scenario whereby your original mortgage loan is 500,000 and loan tenure is 30 years, assuming you have already been paying your loan for 20 months, okay, and interest rate was 4.6%. Monthly repayment amount will be 2,563 ringgit and 22 cents. The tenure, when you opt out for moratorium, right, the balance will be left with 340 months. Okay. And if you opt in for moratorium, there would be an extra interest charges of 11,191 ringgit and 50 cents. Okay, on scenario 1, let's say you opt out for moratorium and continue to make your monthly loan repayments as per the original schedule. And you will see that you will finish your loan by 340 months. Okay, and the total payments for 340 months would be 871,494 ringgit and 80 cents. Scenario 2 is when you opt in for moratorium, okay, and you keep the original repayment period plus 6 months, but increase the monthly loan repayment amount to cover the extra interest charges. So in this sample, you will see that the monthly repayment increased by 2.3%, okay, or 58 ringgit and 96 cents. The tenure, okay, will be increased by additional 6 months. Yeah, so you will finish paying your loan by 346 months. However, there will be an interest increase. Okay, interest increase by 35,779 ringgit and 48 cents. Okay, and scenario 3 is when you opt in for moratorium, but you would like to keep your amount of monthly repayment amount as before the moratorium. Okay, and you are okay for the bank to extend on your loan tenure. So in this case, you will see that your tenure will be extended by another 23 months. Okay, and there will be an the amount increase. Okay, total payment amount increased by 58 ringgit and 58,954 ringgit and 6 cents. All right, and here I would like to show you an illustrations on the impact in participating payment assistance program, which I have extracted from one of the bank website. So taking this scenario, right, you will see that the remaining principal as 300,000 and the interest profit rate is at 3.25% per annum. When you opt out for moratorium, okay, when you opt out for moratorium, your before, during, and after the payment assistance will be still remain the same, 1,702 ringgit. Okay. However, the total interest and profit amount, right, it would be 108,331 ringgit. Okay, at the end of your total interest for the tenure for the loan. All right, and if you see, there is no increment in terms of interest or profit amount because you opt out for moratorium, but the final amount at maturity will be 1,702 ringgit. Okay, still the same. And if we were to compare when you opt out, when you opt in for moratorium, okay, when you opt in for moratorium and you opt in for 6 months deferment program, okay, 6 months moratorium, you will see that during the payment assistance, you do not pay any, during the moratorium period, right, you do not pay any payment. But after the payment assistance, right, you resume your payment and you pay the same money repayment amount as per your original payment, okay, of 1,702 ringgit. Total interest or profit charge for that loan will be 117,324 ringgit. And you will see that there is an increase in interest or profit amount of 8,993 ringgit. And final amount at maturity will be 20,855 ringgit. Now, why is it so? Okay, basically on the final payment, right, the bank will require you to pay in a lump sum payment, okay? A lump sum payment of 20,855 ringgit when you opt in for the 6 months moratorium. All right. Now, I show you another sample, okay? And in this sample, right, it shows that a case whereby a loan borrower, he opt in for targeted moratorium extensions after the 6 months moratorium ended. And he also signed up for the flexi loan repayments scheme, such as rescheduling and restructuring. So as we can see here, the 6 months moratorium ended by September, okay, 2020. He opted in for moratorium, 6 months moratorium. Then after that, okay, we can see that this borrower, he opted in for 3 months targeted moratorium extensions from November 2020 up to January 2021. All right. Then on February 2021, he signed up for flexible loan repayment, in which bank reduced his monthly repayment amount by only 60 ringgit. Okay. Now let us see what happened next. Now, the remaining tenure became 539 months from the original tenure of 420 months. Okay, and his loan tenure has been extended in total 9 years. Okay, so you see, we have to understand that when we take up the offer from the bank, there is always a consequences to bear. Now, on the same bank website, it is also mentioned that for the payment deferment, okay, if you defer the loan for additional 3 months, during this deferment period, the interest or profit will continue to accrue, and this would increase the total repayment or payment amount. Okay, and the example given by the bank is that the principal outstanding of the loan financing is 300,000 before the repayment deferment program, and effective interest profit is at 3.3%. Assuming original loan financing tenure is 25 years with remaining tenure of 20 years, 240 months. All right, then you will see that the monthly installment amount is 1,710 ringgit. The total increase in total payment, okay, after the 3 months deferment would be 4,584 ringgit, okay, interest charge, additional interest charge here. Then after that, when he opt in for reduction in installment repayment or payments, okay, so in this scenario, it shows that if the principal outstanding of the loan is 300,000, effective interest rate at 3.3%, assuming the original loan tenure is 25 years and remaining tenure of 10 years. Okay, and if you see that the original monthly repayment amount is 2,938 ringgit and 55 cents. If let's say this person, he opt to reduce on his monthly repayment amount to 2,115 ringgit and 30 cents, there will be an additional tenure increase. You see that tenure will be increased by additional 60 months. Okay. Now, so how to manage loan cost moratorium, especially when your loan outstanding principal become higher than your original loan amount, or when your loan tenure get extended due to moratorium. Now, when we talk about mortgage management, it is very important to know when to pay, how much to pay, and where to pay so that the payment will not go to the advance payment. And when we do it right, we would be able to shorten our loan tenure and finally convert the liabilities into asset. Now, let me share with you on one of the case study, okay, of my client case. As you see, this loan is a term loan, not even a flexi loan, yeah? The loan amount is 239,546 ringgit. Loan tenure is 25 years, and money repayment amount is 1,352 ringgit for 25 years. Now, you have to understand, regardless which bank that you get your loan from, the loan accuracy is low. Now, why is it so? Let me explain. Yeah? Now, as we understand, when bank charge on the loan, when bank charge on the loan interest, it is based on daily basis. And 1 year, we have 12 months, right? So there are months with 28 days, 29 days, 30 days, and 31 days. So when bank make us to pay a fixed money repayment amount, don't you think the payment is not right? Okay, so now let me share with you on the loan statement. So as you see here, this loan, the bank has fully released the bank loaner on 28th of February. And during 29th February and 31st of March, there are already an interest charge to this loan. However, bank only informed my client to make her first payment on 1st of April. Okay, so during then, we have already made correction on her loan payment, and that's why the subsequent monthly repayment amount, right? She paid a different monthly repayment amount. Okay, so as you see here, this is the solution. We call this as a FIS ledger. All right, so in this ledger, as long as the client follow the payment date, payment amount to make the payment, then the accuracy will be at 99% of every single month. All right, so as you can see here, once my client has made the payment, she would be able to do a verification end of the month. Whenever, she can check through her online banking to see what is the actual outstanding balance, and she compared that actual outstanding balance against FIS outstanding balance over here. So as you can see here, the differences is only 4 ringgit and 57 cents. Accuracy on April month is close to 100%. And subsequently, you can see the accuracy still at above, okay, beyond 99%. Now, you may be wonder how come from April up to December, right, the accuracy seems like dropping. This is because in year 2020, from April month to up to December month, interest has dropped by 0.75%. But then we have asked my client to continue to make her loan payment according to the same ledger. We did not make any correction on this, okay, because the accuracy is still beyond 99%. All right. So as you see here, on the 6 months after my client has made her loan payment, the first 6 months, okay, using FIS solution to make her loan payment, this is the actual bank transaction. Yeah? As we can see here, interest has already, the bank charge the interest is already lower than the principal amount. So I call this as a magical result, all right, whereby interest charge is lower than the principal amount. Now, if you recall, her tenure is 25 years, and we were to, if we check on the amortization table, right, if you can see here, normally how the loan works is like this, all right? The first 10 years, especially, the first 10 years, especially the payment, the money repayment amount that we pay to the loan, right? 80 to 90% of this amount will pay as interest. So if you can see from the amortization table here, okay, if let's say she follow a bank suggestion, which is she make her money repayment amount of 1,325 ringgit, the interest for the first year up to 9 years, right, you can see that, okay, there are 80 to 90% of the interest charges, okay, monthly payment paid to the interest, to the interest, only little pay to the principal. But, okay, as you can see here, on the 9th year, these are the interest charge, okay? So on the 9th year, right, as you can see here, we break down by months. On the 108 months, the principal paid to the bank is 650, interest paid is 667 ringgit. Okay, it is quite close, okay, quite close to each other, yeah? All right, that she has to wait for 9 years in order to see the magical result to happen. But through FIS solution, if I able to go back, right? Through FIS solution, you will be able to see that on the first 6 months that she used FIS solution, she would already gotten her magical result, whereby interest charged by the bank is already lesser than the principal amount. She need not have to wait for 9 years, okay, to see that magical result to happen. Now, if I were to summarize over here, I keep on mentioning that 99% accuracy is very important. Why so? All right, like I said earlier, regardless which bank that you get your loan from, the accuracy is low. Okay, so if let's say I take an example that the accuracy is 80%, there will be 20% of inaccuracy, okay, multiplied by her tenure of 300 months, which means there are 60 months of inaccurate, multiplied by her monthly repayment amount of 1,352 ringgit. Total loss will be 81,000, okay, as the interest paid to the bank. But because this client, she opt for FIS solution, so we bring up the accuracy from 80% to 99%, which means only 1% in error, okay? And from this 1% in error, right, at most, there is only 4,000, okay, losses as interest, okay? So you can see here, when we do it right, when we manage our loan right, we only need to pay as little interest to the bank, okay? Now, I would like to thank you to attend to this Star Property Award 2022 virtual showcase. And I would like to offer you a free loan analysis report that is worth 388 ringgit. So in this loan analysis report, I will analyze on your loan, okay, on your loan, whereby the report, it will show you how much in total the potential that you will save, potentially save in terms of interest, in terms of your tenure, okay, and then your current loan status right now. What is your current loan outstanding balance, your current loan tenure? All right, so everything, it will be mentioned in this report. All right, and in order for you to get this report, you may contact me, okay, either via my WhatsApp, email, or even my Facebook page. All right, so with that, I end my presentation. See you again. Bye.